in terms of the yield story, you've mentioned the yield story. We continue to see those yields moving higher. I see that across the Treasury curve. We've seen a key inversion, though, in one part of the Treasury curve. We've had this conversation a number of times, though, when we've been talking about different parts. So what difference, then, does it make that today we're seeing another area of the Treasury curve invert, the 530s? What difference does that make?
I'm going to really upset you, Anna. It makes no difference. The 5-year, 30-year inversion, I think, is massively overhyped. It is not a great indicator of recession in the economy. People tend to watch the 3-month 10-year, the 2-year 10-year, and the 5-year 30-year. Yes, it's often watched, but it's not the classic kind of straight-through delineation that there will be a recession upcoming. For a start, it didn't invert before the last recession we just saw. And the recession before that, it took about 2 years until we finally got a recession. So the 5-year 30-year inversion is not a great indicator to watch. I way prefer the 2-year 10-year or the 3-month 10-year. However, it does indicate that the curve continues to flatten overall, and therefore the more important inversions may be ahead of us.
OK, so we'll watch for further inversions, but it is part of that broader narrative. What do you think is weighing on stocks, then, in terms of the US futures picture? I mean, not great moves, but certainly moving to the downside in early trading. Is it to do with China, or putting China Omicron back on the radar, or are stocks paying attention to what's going on in bond markets increasingly here?
I think it is about bond markets. I think these moves really are quite extraordinary. We know this is a theme, and just because we know it's there doesn't mean it can't impact. Financial conditions are tightening really, really rapidly, and in a pace that even a couple of weeks ago, when we were getting excited about how quickly they're tightening, we couldn't have imagined they could jump at these kind of levels. The move in front-end yields in the US is really quite extraordinary. I think that markets should be paying a little bit more attention to what's happening in China in relation to the COVID situation, but at the moment I do think it's more about the yield story.
OK, and what about what the BOJ has been doing and its ability to cap yields? Because is that going to be something that other central banks are interested in? Or, you know, the BOJ has been happy to go its own way for many months, many years, perhaps. It is having an impact on the currency markets.
Yes, completely. This is one central bank that is working really proactively to try capping its yields. It's stepped in to buy an infinite amount of bonds again to kind of maintain its yield curve control, 0.25% of the 10-year. But the market is not getting dissuaded. The market is basically saying to the BOJ that ultimately they're going to have to back off on the policy. They're going to have to change their policy. The market is saying to the BOJ, there is an inflation problem. There's a global inflation problem. Yes, Japan may have less of this problem, but you cannot have yields down here with the size of debt you've got, the amount of debt you've got, when global yields are rising. At the moment, while the BOJ caps those yields, maintains those yields, we are seeing that yen weakness. People thought the move recently had been extraordinary. It's got even worse. We've seen the most weakening in the yen for more than 5 years, and it continues to be really, really vulnerable given what the BOJ is doing.